Okay, I'm back with more problems. This particular problem comes from short exercise 2-9. It's related to the general journal. Remember what we talked about the general journal. There are dates. There are account titles. You don't really have to worry about document number or post references. And then there are debits and credits related back to the T account. So when we first start, when we have a transaction that occurs, so whether somebody buys something and they pay money, in these instances, we're talking about the company. So say the company buys a computer, we're going to record that transaction. That transaction is recorded in the T account. So we record it on a T account, and we have the account title listed here. So say the company buys a computer. And let's say they buy that computer for $2,000. That computer is an asset, right? So they bought the computer. The asset increased. What do we say when an asset increased? We debit it. It goes on the left side. So on the left side, $2,000 goes on the left side, right? So then, after we put the information in a T account, it then goes to what we call a general journal. This is where the double entry accounting methods come to play, where you have a debit on one side, you have at least two accounts, and you have a debit on one side and a credit on the other side, and it balances out. You'll see what I'm talking about when I work this. So, first one we have September 6th. We build a customer for services performed $3,800. Okay, so let's go back to it. What happened here? Okay, we build a customer. So when you see that word build already in your mind, what you should be thinking about is okay, account. Build a customer, that is an accounts receivable. So we did some work, we build the customer for the work that we've done. Customer hasn't paid us yet, so customer owes us. Customer owes us, so we do an accounts receivable. So I want to go ahead and put this date down here. The date was September 6th. I know this because of this here. Okay, September 6th. So the account title, the first account title, build a customer for services, is going to be accounts receivable. Because we perform the service, we bill the customer. Okay, accounts receivable, what is it? It's an asset. In this case, our accounts receivable increased because we now have $3,800 worth of accounts receivable that we did not have beforehand. What happens when you increase an accounts receivable? We debit it. We debit it for $3,800. Okay? And what else occurred? So we build a customer for services performed. So we have performed the services, so that's revenue. So our revenue has increased by $3,800. So revenue, this is going to go in on the account title as revenue. Our revenue increased by 3,800. What happens when you increase revenue? It's a credit. It goes on the right side. This is what we mean by double entry accounting, that it balances on both sides. There's a debit side and there's a credit side, and it balances. So that's double entry. So we debited accounts receivable for 3,800. We credited service revenue for 3,800. The next one, it says we received partial payment from the customer billed on September 6th. So now, 10 days later, September 16th, this is related to the same transaction. This customer now pays us some money. They pay us, they're still going to owe us some money, but they pay us $1,800. Okay, so we received partial payment. What did we receive? We received cash. So I'm going to go down here, September 16th, right here. This is where we are. I'm going to put September 16th in. Right here. I'll click done. So it says we received partial payment. So we received cash. So I'm going to go ahead and put cash in. What is cash? Cash is an asset. Did cash increase or decrease? Well, we received $1,800 more dollars. Cash increase. Cash is an asset. When it increases, it goes on the left side. So we're going to put 1,800. We debit cash. All right. All right. So we received partial payment from the customer billed on September 6th. The question is, what did they pay on? They paid on their accounts receivable. Their accounts receivable, what they owed us was $3,800. That's what they paid us. So they paid on their accounts receivable. At first, they owed us $3,800. They paid down $1,800. So what does that tell you? That tells you that accounts receivable has decreased by $1,800. What is accounts receivable? It's an asset. What do we do when we decrease an asset? We credit it. 1,800. Once again, you see double entry accounting. Debits equals credits. You have at least two accounts. Your debit equals your credit. If it does not equal, then we've done something wrong. This is just another example for you. I'll be back again shortly.